Mercado Libre, is error rate imminent? Q1 was stellar. Revenue growth 49% year over year, GMV 42%, payment processed 50%. There was only one negative value. The margin, operating margin, shrinked to 6.9%. Of course, the market focused on this last one. And this is the narrative that drove the price action for the last few quarters now. So the narrative is that competition is increasing, Mercado Libre is suffering, and so they are obliged to lower prices to stay competitive, and this is leading to margin shrinking. This is the narrative. I do not believe this narrative. If you look here, again, the numbers are skyrocketing. Just look at credit book that grew 80% year over year. Fintech users grew, commerce users grew, and everything grew. Now, where the market see margin compressions, I see a business that is compounding at full speed. And in particular, here I believe there is the Jevons paradox at work, as explained by the management. So basically what the management is saying is that since more players are coming to the field, this is leading that more users are switching, more people are switching from offline to online payments, having more proposals coming their way. And this is actually enlarging the total addressable market. And that is why, in front of this amazing opportunity, Mercado Libre decided to be more aggressive and to do what they have done, for instance, in Brazil, lowering the threshold eligible for free shipping and doing the other things that they have done. So they are just taking advantage of this opportunity, and as the market became larger, the player that benefit the most from this is Mercado Libre, because it's the biggest player with the biggest infrastructure and the best offering. This is the narrative I am believing. So operating margin are falling, but as explained by the management, this drop is explained in the last quarter from 10 to 7%. Operating margin is explained 2/3 of it by the fact that Mercado Libre, in particular Mercado Pago, it's expanding the credit book so quickly that basically what they need to account as a cost as provisioning for bad loans is decreasing the margin. But what's the fact here is that this is not a cost. This is an investment that they are doing, because if the credit book is expanding, it means that this expansion will return an investment. So actually, the lower the margin, the paradox is that the higher the return they will have on this investment, and the higher will be the revenue expansion in the future, right? So this is actually the contrary. This is 2/3 of the explanation of the falling operating margin. The other 1/3 is probably due to all these things that I was explaining, like lowering, let's say, making available free shipping to more users for more kind of goods and shipment. So they are offering a better service to be more aggressive and gain more market share. So this is what I was explaining. The pie is expanding, and we can see clearly this from the result. So Brazil grew GMV, gross merchandising volume, 30% year over year. Items sold 56% year over year. And after this, the unit shipping cost dropped 17%. So basically, as Mercado Libre has the biggest and most efficient infrastructure, all these additional shipment that they are doing are actually lowering the unit shipping cost because they are using even better and more the current infrastructure, right? So basically, this is economy of scales. And the online purchases per year, just to confirm my narrative, is across Latin America average 7 purchases per year. Then you have Mercado Libre that is 11 purchases per year. And then you have the US average that is 41. So again, this means that Mercado Libre is doing the right choice to deciding to be aggressive as more and more people are coming online, and this trend will last for the next few years or maybe even a decade, given this gap that there is between the average Latin America buyer and the average US buyer, right? And Mercado Libre is right in the middle of this gap. That means that they are going to capture more than competitor when this gap will be slowly closing. MELI is not among the stocks that are blessed by the AI hype, but I think this is absolutely wrong because Mercado Libre is one of the company in the world that has the best set of first party data. This means that Mercado Libre is positioned to be one of the best AI driven business in the world. While they've shared that they are currently seeing a lot of improvement in search intent, so that leads to higher conversion, meaning that they are making available AI instrument like AI assistants, Copilot, how they're calling it, I don't know, to buyers to improve their research. But of course, this is only one part of the story. You need to understand that Mercado Libre will use AI and is probably using AI everywhere. So one of the low-hanging fruit is of course advertising. So as Meta is doing, it's increasing revenue a lot thanks to AI because advertiser can better position and understand how to get value out of their advertisement. This is driving, of course, return of investment. So this is the low-hanging fruit, and I'm sure that as the advertisement business will become bigger and bigger and a significant part of Mercado Libre revenue, we'll see this more and more in the numbers, and the management will start to be more vocal on this as ads revenue is now growing 73% year over year, and I believe making some calculation that it's running around 2 billion annual run rate. But as this will become bigger and bigger, let's say in 1 or a couple of years, it will become more and more apparent the effect that AI is having on Mercado Libre business. But ultimately, I believe that the AI value for MELI is much bigger than this. What MELI is building is a vertical ontology of Latin America. So basically, they have all the data to model how people in Latin America are spending their money. And this has even no value. It's not quantifiable. It is in the trillions, right? So I'm pretty confident that this will become more and more clear probably in a few quarters from here. So a big part of my thesis is that while Mercado Libre has built the Latin America infrastructure for shipments and to do purchases, that is its competitive advantage. On the other side is building a fintech ecosystem that will benefit a lot from the commerce ecosystem and will make them the biggest fintech company in Latin America. And as a benchmark to measure if this what I'm expecting that what I'm predicting is becoming true, I take Nubank as a benchmark. And in particular here, if you see, if we compare the monthly active users of Mercado Pago with the active customers, that it's a bit different magic, but it's pretty comparable, of Nubank, you see it cannot be highly appreciated from this graph, but these two lines are converging. So Mercado Pago is still smaller in terms of users, active users, but is slowly catching up with Nubank. And I think this trend will continue. The same, it's measurable even in the credit book. So Mercado Pago credit book is expanding 80% year over year, while the Nubank one, I believe, I do not have the data here, but I believe it's expanding around 20-30% year over year. It's still much bigger just because that is basically the core business model of Nubank. But my prediction here is that even here in a few years, Mercado Pago will catch up with Nubank. And this will be the proof that my thesis is working out. Even in terms of NIMAL or margin that they are able to make out of the loans, so both on credit card or any other kind of loans. MELI, it's much higher than Nubank to 17.8%, and in general is much higher than any other kind of bank or digital bank in the region. Right, so this is again, I reconduct this to the fact that MELI has the ontology, has the understanding of how consumers are spending online, and they can better target what credit to give to whom, to what people, right? And this is the other big advantage of having the two ecosystems, the fintech and the commerce ecosystem, that are overlapping and targeting the same people. So again, the market sees margin pressure, I see a reinvestment cycle. Now, the real question is when the market will re-rate Mercado Libre. Well, I think there are a few catalysts that may trigger it. One is NIMAL, so the margin on the credit. As they see this also, as the operating margin decreased in the last quarter, in the last few quarters. So I think investors want to see this stabilize, not necessarily go up, because it's already, in absolute term, it's already a good one, but they want to see this stabilize to make sure that the trend is broken, basically, and Mercado Libre, Mercado Pago in this case, is not lowering margin forever, right? So same with margins. They want to see this stabilize. They want to see, of course, free cash flow keep rising. And even an AI rotation would help. I mean, now all the money are going to AI stocks. Look at SpaceX with the following the narrative of data center in space build out and everything. Eventually, this trend will at least cool down, right? So the money will start flowing back more uniformly to the other good stocks. And finally, stock split. Even if economically it doesn't change anything for the company, of course, but I think this could reignite the attention of retail investors, at least, because now the stock is priced above $1,000 per stock, so many cannot afford it, meaning that they are not even going to talk about it on X. So it's all a flywheel that is not benefiting the stock. So I believe it will really benefit the stock if the company will do a 1-to-10 stock split now. So probably 2 to 3 of these could trigger a rate of the stock that now it's really undervalued in my view. Guys, this is not financial advice, of course. I'm invested in the stock, so do your own research. And if you want to read the full and detailed article on this, just go to lorenzotosense.com. Ciao.